Hello everyone, welcome to my YouTube channel. In series of credit card, we'll see what is credit card and how do they work. Also, we'll understand how do credit card companies make money. Come and let's find out. Let's see if you want to buy a cell phone, but unfortunately you don't have sufficient money to buy. What other options are there? In such a situations, you can use credit card and pay it later. Actually, credit card is that which helps to make purchase immediately and pay for it later or end of the month. When we have money, that time you withdraw cash and use it to make payments. Second option, that is debit card, which is directly linked to our bank account. When you make payment, then the money is deducted directly from your bank account and transferred to the other party. But in credit card, bank makes the payment on behalf of you to whoever you trying to pay, and after end of the month you repay to that bank. So can we think that credit card as type of mini loan? Normally when you take loan you get cash if you want to, but here instead of a loan, bank giving you a plastic card. Now I will show you how credit card look like. As on screen you can see this is front side of a credit card. Then card issuer bank name is mentioned here. Then this is a EMI chip. Then this is a type of the card. Then here you can see the 16 digit card number. Then account opening date and the expiration date is mentioned here. Then card holder name, here contactless logo. This is a card network. Basically it is involved in the payment processing company. Later videos we'll see how this card networks works in the transaction process. Now this is your backside of your credit card. You can see the max strip here and customer signature, CVV, hologram, and you can find the customer helpline number. Now we'll see how credit card companies makes money. So first is the interest income. When the credit card holder carries balance on the credit card beyond the payment due date, then issuing bank charges interest to it on their balance amount to the card holder. So interest rate called APR, that is annual percentage rate, and it is very high, and it totally depends on the type of credit card and the issuing bank. Then after second major source of revenue for the credit card issuing company is interchange fees. First is joining fee. So joining fee is charged after the application is accepted and the card is activated. So basically joining fee is charged by the bank that issue the card. Now second is the annual fee. So annual fee is a fixed fee charged annually to the customer. Next, cash advance fee is charged on their cash withdrawal from their ATM. Then finally we have the late payment fee. When customer fails to pay minimum amount due by its due date, then fixed late payment fee will be charged. Hope you guys understand what is credit card and how do companies make money. Uh, Thank you so much.